stock market is divided into different tiers or different type of stocks. And the categories are based on the market cap. The bigger the market cap, right, is on the topmost, which is the mega caps. The mega caps are companies which have market caps of above 200 billion. And how market cap is derived is when we take the stock price multiplied by the number of shares. So basically, in other words, right, the market cap is another indicator whether the company is a big company. The bigger the company, the bigger the market cap. So amongst the example of companies which are mega caps, right, and also large caps, are companies like the FANGs, Facebook. Those are the mega companies. The next is Alphabet, Apple, Netflix, Google, right? Those are the big ones. They have businesses all over the world, and almost all of us use their products in a daily basis. Examples of a small cap company, right, will be this company here, right, SolarWest. And if you could see, in 6 months, it rose by 40%. The whole thing of small caps are, number one, they can give shareholders the potential of growth. And every time when someone talks about small cap, right, they every time use the word growth, small cap, growth interchangeably. Second thing about small cap is that they're undervalued now. The whole thing of it all is that small caps, since not many people know about small caps, they are relatively undervalued or underpriced. The third one is they give a lot of innovation, especially if it's a new company, they just got listed, right? They have a lot of new innovation. The disadvantage for small caps in the next couple of slides, right, we can see is that they are volatile, they have limited resources, and to get information is very limited. Even Tesla started out like a small cap stock. And at that point in time, we all know that the founder of Tesla, he was maybe 2 or 3 weeks before he used all his money, right? And he used his personal money to keep the company afloat. And there was a story of him staying in his friend's house also. And this is really the struggle of a small cap. But having said that, once they have already leveled up, once they know how to produce, once they know how to use their machinery, once they already get into the groove of everything, if you are an early investor for a small cap, right, especially for Tesla, right, you can see that the returns is about 18,000%. The point of what I'm trying to say over here is that small cap does give amazing growth returns. But having said that, during the early stages, they need to go through a lot of trial, errors, mistakes. And this is where you can see the stock price just move up and move down. But having said that, once they reach to the growth stage, you will see the stock price just shoot up. A lot of these stocks, they are at the very initial stages of a startup where they burn a lot of cash. The risk is there for investors. That's why their stock price is very volatile. So when I say trading buy, is basically when you buy the stock, you want to look towards selling it in once the stock price actually moved up maybe 10 or 20%. Just as a teaser, these are the 5 stocks that we actually have on our watch list. And I hope that you guys like this webinar. So with that, thank you so very much. And I hope to see you guys next week. With that, take care, guys.